Hi, I'm Harrison Klein, real estate analyst at Cohen & Steers. Today, I'd like to briefly talk about healthcare real estate opportunities. Unfortunately, COVID-19 has strained our health system at times and has disproportionately impacted the elderly. Despite this difficult backdrop, healthcare operators have done a tremendous job keeping residents and employees safe, and we are forever grateful for the heroic actions taken by healthcare's first responders. Healthcare real estate incorporates many different property types, including seniors housing, nursing homes, medical office, life science, and hospitals, all of which play an important role across the healthcare continuum and have seen different levels of impact from COVID-19. Today, I'd like to focus on seniors housing, which we believe provides an attractive risk-adjusted opportunity. Seniors housing is private pay communities for the elderly and provides a wide range of care. However, these communities are distinct from nursing homes, which tend to focus on higher acuity residents and are government reimbursed. Seniors housing has been impacted by COVID-19 as a result of lower move-ins and higher expenses. So then, why are we so bullish on senior housing REITs? Well, first, there's a historic opportunity from a valuation perspective. Despite rallying off their March lows, at the end of July, senior housing stocks were still 40% below their February highs. Stocks are trading at record low multiples, and there is an opportunity to acquire high quality real estate well below replacement cost. Senior housing is also well positioned both in the short and long term. While the short term has been a little bit challenging, we do believe we are past trough fundamentals. For instance, in April, new move-ins were down over 65% nationally as many communities shut their front doors to new residents. At the end of July, based on our proprietary data, new move-ins are up over 100% from their April lows. Additionally, based on commentary from REITs, from operators, and from third-party data provider Inquire, leads, tours, and web traffic are all approaching pre-COVID highs. We also believe that senior housing is well positioned from the long term, mainly to capture the growth in the 80-plus cohort, which is the fastest growing demographic and outspends every other age group on healthcare combined. These facts give us confidence that seniors housing is well positioned in both the short and long term. We also expect supply to slow and have actually already started to begun to see this. For instance, based on data from the National Investment Centers, new starts in the second quarter of 2020 were 80% below year over year and were the lowest levels since 2009. Lastly, we believe that seniors housing is in its infancy in terms of technological innovation. Certain communities are piloting artificial intelligence that'll help seniors who are battling Alzheimer's and dementia, while other communities are piloting virtual reality that will help seniors suffering from isolation. These are just two of the amazing technological feats that we expect to occur in the senior housing communities that the REITs own. This will largely lead to an improvement in quality of life at the communities, as well as lead to margin expansion and cash flow growth. While the last few months have been challenging for senior housing, we believe that the future is bright and expect that the long-term fundamentals will be intact. Coupled with record low valuations, we believe that senior housing to be an attractive place to allocate capital to. We look forward to updating you on the future progress of senior housing and healthcare REITs.